Hey, welcome back to YT Finance, and today we are talking about why Palantir's PLTR stock, Nano Dimension's NNDM stock, and SoFi Technologies SOFI stock have all dropped substantially in price. We will also go over the newest price predictions and price targets for these stocks, we will perform some stock analysis, and we will go over the latest stock news updates along with some of their approaching catalysts. Then I will address why Nano Dimension specifically can grow into their high valuation, why Palantir is a great buy right now, even if negative bearish analysts are correct about it, and lastly, I will go over why SoFi stock could surge in price due to their upcoming catalyst. Go and press the like button right now for more PLTR, NNDM, and SOFI stock news updates. Comment your thoughts about these stocks down below, turn on all subscription notifications to stay informed, and now let's get right into today's stories. By now you know that Palantir Technologies is a data analytics company that does business with both commercial and government entities, which are not limited to the Pentagon, FBI, and CIA. You may also have taken note that its stock price has surged around 88% since its direct public offering. However, if investors did not invest into this company in the very beginning, they could have less than impressive or even negative returns right now, especially since the stock price continues to drop. Despite matching or even exceeding growth estimates from analysts from their Q3 earnings report, Palantir stock is still falling. Analysts argue over this stock's true worth, which does not give investors confidence. For instance, a William Blair analyst does not believe that Palantir can maintain their projected 30% annual growth rate until 2025, like Palantir's management predicts. On top of that, an RBC Capital analyst cut their price target for Palantir Technologies, but luckily a Morgan Stanley analyst actually increased their price target from $22 per share to $24. Now, I think Palantir's future is very bright, but they have a lot of growing to do to justify their current valuation, because right now they trade at around 27 times their sales, which is not insane. However, a true government contractor stock like Booz Allen Hamilton only trades at 2 times their sales. But I believe that Palantir can justify their premium, and I will explain why. First, I will put my money where my mouth is by buying Palantir stock below the $20 threshold, preferably around $17 for a long-term hold. And the reason I feel comfortable doing this is that even if negative bearish analysts are correct and the average price target is around $25 per share, that would result in a 20% year-over-year gain in a single year, and that would outpace the overall market by over 2-fold. Palantir's true enemy is not the fact that their valuation is too high, or even the fact that they have stock-based compensation programs, but rather it's their growth. If Palantir ever delivers revenue growth below 30% year over year, or on any of their earnings reports, some investors will sell and drop the stock immediately. We have even seen analysts, such as the one quoted below, who have dropped their stock price target for Palantir from $25 per share all the way down to $19 per share. That same analyst has also said things like this about Palantir, and I quote, that while Palantir's commercial business continues to accelerate, he believes some of the growth there is due to a program through which the company makes strategic investments in early-stage businesses that then use its technology. The quote goes on to say, "We do not believe revenue from SPAC investments is sustainable, especially given the relatively small size of the companies Palantir is investing into," end quote. The analyst is clearly referring to Palantir's Foundry for Builders program, where Palantir has identified future large-cap companies in the form of SPACs and startups, which are given Palantir's Foundry platform on a contractual subscription basis that they pay for. So the analyst is then saying that all revenues from this type of revenue source do not count. And to me, I say, why not? If anything, as these companies scale and grow, they will just have to rely more on Palantir's technology as they expand. Palantir actually makes twofold revenues from this, because not only is Palantir receiving safe and guaranteed revenues from the subscription model, we also see that Palantir has investments into these companies, so as these SPACs continue to grow and expand, their stock price will increase, which will make Palantir richer because Palantir is also invested into these companies. Secondly, this is clearly going to be a long-term revenue source for PLTR due to their partnership agreements with these companies, in which some of them are even ran by old Palantir employees. Thirdly, Palantir is not even making that much money from this right now, so to say that the only reason Palantir's revenue growth for their commercial segment increased so much is due to their short-term SPAC investments is not only unfounded, but also completely misleading by this analyst. In a nutshell, I would not be surprised if the PLTR stock price fell all the way down to $15 per share, and even if that happens and bearish analysts are correct about the stock price, we still have great upside because the average price target is $25 per share in a single year. Now let's talk about Nano Dimension's NNDM stock, which is a 3D printing company which surged from being worth pennies when I first started to report on it, which then surged up to $18 per share, but since then it has come all the way back down to less than $5. Investors who are still in the stock are waiting for NNDM's long-term potential to be unlocked, but for a company who brought in $3.4 million of revenue last year and a $1.3 billion valuation, it needs to do a lot of growing to justify its current valuation. So the question is, can Nano Dimension produce $1.3 billion worth of revenue each year? And to that I say yes, it is possible. For instance, Nano Dimension is known for producing high-performance electronic devices and more specifically printed circuit boards. The printed circuit board industry has an addressable market of $58 billion, which can grow up to $70 billion by 2024, so there is more than enough room for Nano Dimension to grow. Also, there is not much competition here because even the industry leader, which is Jabil, which has an $8 billion market cap, and they have partnerships with companies like Apple and Amazon. So if Nano Dimension can match Jabil's manufacturing capacity through 3D printing, Nano Dimension can easily grow to an $8 billion valuation as well. This then comes down to if you believe Nano Dimension can achieve this goal. NNDM is still developing their technology, but I also see the stock as a good value play of sorts because they have around $1 billion worth of cash or cash equivalents on their balance sheet, which is rapidly approaching their actual market cap, so their price can simply be justified based on their cash reserves alone. So NNDM stock is not a buy based off of their revenue generation, but rather their cash reserves, their ability to take full advantage of the printed circuit board industry, and how they develop their technology in the future, which could unlock huge potential if done correctly. Currently, the NNDM stock price is hovering around about $4.20, and according to one analyst, they have a one-year price target for NNDM stock of $10. Now let's talk about SoFi Technologies, ticker symbol SOFI. SoFi is a financial technology company that has an average analyst price target of $25.57, and to me, SoFi is a clear long-term hold and buying opportunity right now. Once they receive their bank charter, which will be a giant catalyst, SoFi will be able to hold some of their loans on their balance sheet, which will be great for SoFi, and it will improve their chances of reaching profitability sooner. SoFi is currently in the process of accruing as many customers as possible, and with their exposure to cryptocurrencies, this is just making it easier for SoFi to attract new young money investors. SoFi has entered and is now a part of the cryptocurrency movement for many reasons, but one is that cryptocurrencies tend to attract the exact target audience and customer base that SoFi is aiming for. The best part is that as cryptocurrencies become more mainstream, more and more people will be drawn to SoFi to use their exchange and their brokerage platform to buy and sell cryptocurrencies in the future. Right now, SoFi only offers a custodial cryptocurrency wallet for trading crypto, which means that users cannot send cryptocurrencies into their SoFi account and vice versa. However, despite this, SoFi has said that it plans to implement this capability and capacity to its brokerage account and exchange in the near future to appease its customers' demand for this product. I personally think this is a fantastic move that SoFi is doing, and I hope that they add a lot more cryptocurrencies to their portfolio so this SoFi account can appeal to a broader cryptocurrency audience. If we really think about it, this is a genius move by SoFi because once these cryptocurrency investors are acquired by SoFi Technologies, SoFi can begin their cross-selling campaign, which will cause most of these younger investors to potentially refinance their student loans, take out a loan for a mortgage to buy their first home, or just take out a personal loan for general wants or expenses. SoFi exceeds at drawing customers in, keeping them long term, and having them use multiple products or services that they offer, which is the real genius of SoFi's business model. So I want to hear from you. Do you use cryptocurrencies? Do you trade? Or do you invest into any? And if so, what are they? Comment down below. Remember to like this video right now, subscribe if you are new, and I will see you in the next YT video.